Joining us now is Jason Gammel, senior analyst at Jefferies. Jason, very good to have you with us. Often see you at the OPEC events, so nice to have you here in the studio. So let's talk a little bit about what we heard there from Novak. He was talking about how there's a mixture of fundamentals and sort of risks influencing markets at the moment, influencing prices. Are we pricing in the risks or the realities with regards to Iran? So does the price where it is right now reflect all of the Iran sanctions that are possible, or just the ones that we've seen at this point?
I don't think we're reflecting the full impact of Iranian sanctions as yet in the price. And the reason that I say that is that we've seen the Saudis and the Russians step up production to offset what's happened with Iran so far. But if the U.S. is really serious about driving Iranian exports to zero, that's not being priced into the market as yet.
So the oil price could go higher from here, then?
It could.
Do you think that Trump has the appetite for that? I mean, President Putin was saying, and this is not to ask a political question, but this is President Putin saying, you know, to President Trump, look in the mirror if you want to see why oil prices are so high. Does Putin have a point then? Well,
we're 1 month out from the midterm elections, and I think that President Trump would probably like to see oil prices lower than they're at moving into the election. We do know that the U.S. is going to be putting 11 million barrels from the strategic reserve into the market basically as of today through the end of November. So he is taking some actions to try to mitigate. He's obviously putting pressure on the Saudis to increase their production as much as possible. Really, though, the beginning of November is when the U.S. sanctions have their full effect, November 4. And from that point forward, that's when the market is probably susceptible to further upside moves in price.
OK, so we'll watch out for it there. But in terms of the who has control of the oil price at the moment, I mean, the Russians, they're talking, Novak talking about 65 to 75, and Trump would clearly like it to see it lower because we're higher than those levels now. So is there a sense that at some point everybody gets on the same page and everybody wants to see a lower oil price, and that can be delivered, or no?
Well, I think the market has control of the price. And in the near term, I think what we're seeing is the market reacting to the potential effects of the Iranian sanctions and the fact that spare capacity is moving to a precariously low point. So we're having to price in more and more political risk. I've been following oil for 30 years. This is the lowest level of spare capacity in the global system relative to demand that I've ever seen. And I think that does mean that prices probably have some push forward.
And they push to 100?
We're not calling that, but it's certainly a realistic possibility.
OK, and then there's the demand side then, because you were talking about the levels of inventory or levels of potential supply versus the demand story. How weak or strong is the demand story? How do you feel about the demand story versus sort of 3 months ago?
Demand is beginning to feel the effects of prices, and in emerging markets in particular, given the devaluation of currencies, we're actually seeing oil prices in the local market equivalent of over $140 in places like Turkey and Argentina, and that is having some negative effect.
And in fact, just to that point, I've got here, this is oil prices in various different currencies, and this is quite a stunning chart. I do like this one. This is in Turkish lira, in South African rand, in Argentine peso. So you see that, and of course in US dollars in the yellow. I mean, just to show the pressure on these emerging markets.
Exactly.
And that is having an impact on demand then. That is reducing demand. I mean, how influential is that reduction in demand in emerging markets? Because these are still on their own quite small economies.
They are, but in aggregate, they're actually a pretty big piece of the overall demand. Just to put it into context, the global oil market is about 100 million barrels a day. We had expected demand growth to be about 1.8 million barrels a day in the end of the first quarter. We now think it's going to be closer to 1.5 million barrels a day. So we're talking about a 300,000 barrel a day increment in a 100 million barrel a day market. It's impactful in price, but the reduction in Iranian exports, which are 2.2 million barrels a day in July, I think is just going to be far more impactful in the near term. Now, prices will regulate supply, and we could see further downward pressure on demand. I think prices probably are at high levels for a relatively brief period of time, but we're in a very tight situation.